Dr. Edward Yardeni, what he thinks of all of this as well, because we are entering a holiday season which is packed with data points. Dr. Yardeni, good having you. Thanks for joining in. Good evening to you.
Good evening.
How do you see the landscape? Because much as we would want the year-ender to be a quiet one, we are packed this week with rate decisions which could have a meaningful impact, you think?
Well, absolutely. Everybody will be focusing on the Fed. I think you're right that the expectations are that there will be a rate cut. It'll be 25 basis points. That'll make it 100 basis points since September 18th. The question is, will it be a hawkish cut? In other words, will Fed Chair Jerome Powell in his press conference after the FOMC meeting basically walk back any expectations that there will be further rate cuts anytime soon? He might say there may very well be a pause.
Pause. Okay, interesting. I'm guessing the FOMC is obviously, if it's a pause, then it's not as big a decision. But therefore, Dr. Yardeni, do you reckon that BOJ or any other decision that is coming in, or a data point that might be coming in, China is releasing a bevy of data, anything else triumphs or trumps the Fed decision as the most important one?
I think that is the most important one. I think the BOJ, there's some expectations that at some point they may start raising rates a little bit more aggressively, but right now it could go either way. No increase or a small increase. The Bank of China, the People's Bank of China, probably will lower interest rates and to provide some more liquidity because their economy needs it, as we can see in the latest retail sales report.
But hi, good morning. It's also Samina joining in. What I do want to talk about is spend some time on Japan, because we've been so focused on China and what's happening on Wall Street that we've pretty much kept Japan out of a talking point. We should remember that we did have the carry trade crisis that happened a few months ago, which of course shook all of us up. But as we step into 2025 with inflation showing signs of rising in Japan and a rate hike potential in the next couple of months in Japan, how do you feel about that market and that, of course, becoming the biggest threat to flows for global equity markets?
Well, that's a very good point. And a few months ago, we did have the carry trade scare that suddenly it seemed as though people who had borrowed in yen were panicking because the Bank of Japan was starting to raise interest rates. And so there was a sell-off. I think it lasted about a day or two. It didn't last very long. And so I don't think there really is much of a carry trade risk in the market. I think everybody's aware of it. Anybody who still has that trade on knows what the risks are and probably has it hedged in all sorts of ways. Again, I'm not sure that Japan will matter all that much. I think the focus will mostly be on the Fed, as it typically is. That's the central bank that is central among all the central banks.
Agree, and hence it's called the mother market, right? How do you feel about India, Edward? Do you track this market closely? We've come out of a very difficult, or rather difficult last few months. Earnings haven't been great. Local capex isn't picking up. We've been suffering from foreign outflows. Not like it's impacted the market significantly, but it's always noteworthy in some ways. As we step into 2025, does this still become or remain the big bet for global investors, you think? And is Indian equities preferred, or would you like that if you had to pick one?
Well, I'm often asked among the institutional investors that I work with in the United States, what recommendations I have for investing overseas. And they always ask me, what do you think of emerging markets? And I said, which one? I think the old days where emerging markets all kind of performed in the same manner, and you could just buy the ETF for emerging markets and have it all go one way or another. I think that's not the way things are anymore. India's had a great move. China's been very frustrating for investors. Brazil has been disappointing. I think India is doing extremely well. I think the stock market discounted a lot of good news, and so at some point the market is sort of ahead of the fundamentals. And I think that's where we are in India. And I think the same thing can be said in the United States. We've discounted a lot of the good news on artificial intelligence, on the strength of the economy, on the Fed easing. So I will not be surprised if we have a global correction in stock markets, including India, including the United States, in January. In the United States, a lot of people, and I think this is true in India. I don't know your tax laws, but here in the United States, a lot of people have huge capital gains in their portfolios, and I think they want to rebalance. Maybe they don't want to own as much Nvidia as they own or as much Apple as they own, but they're not going to do it between now and year end because of the taxes. And so I think there could be some rebalancing in January that'll cause a sell-off as people sell and kind of move around. But it's not going to be a bear market, and it won't last very long. And it'll be probably a great buying opportunity in the United States and possibly in India.
Edward, it would be unfair if we didn't talk to you about what's happening in Bitcoin. I mean, the Fed chief as well talked about it a few days ago, saying that it's not a competitor or not competition for the dollar, but instead for gold. How do you feel about Bitcoin, dollar, and gold? Which two asset classes are negatively correlated, and who stands to gain as we step into 2025?
Yeah. Well, Bitcoin has had a great move, and obviously the market capitalization of Bitcoin has increased, but it's still tiny compared to the dollar. So I don't think Bitcoin is really moving the needle at all when it comes to foreign currencies. When it comes to gold, I think it is viewed as an alternative to gold, and it's certainly has outperformed gold of late. But I think what's driving Bitcoin is the increasing acceptance of Bitcoin as a legitimate asset class, or cryptocurrency as an asset class, and Bitcoin in particular. And when you have the incoming Trump administration basically endorsing that Bitcoin as an asset class and talking about setting up a strategic fund, the outlook remains positive for Bitcoin.
Okay. I have one final question, really.
Sure.
As 2025 opens up and we see Donald Trump taking center stage, yes, uncertainty is the only certainty, if you will, and whether it's
Correct.
on X or Truth Social, we don't know. But
True.
would you believe that the America First policy, which is great for America per se, but could it hurt all other markets, or would some be hurt more, like say China or Europe, auto, for example, would be hurt more than others? Have you given some thought to this, Dr. Yardeni?
Yeah, absolutely. I mean, we just had 4 years under Biden where there seemed to be sort of a more globalist approach to dealing with countries, a more equal level playing field. Trump certainly has stressed that his administration will put Americans' interests first. And I think there's nothing particularly wrong with that. He's pointing out that every country should be pushing for their national interests. It's just when we sit down and negotiate trade deals, currency deals, investment deals, it just makes more sense if in those negotiations the deals are made that both sides win. Trump wrote the book on deal making, the art of the deal, and the idea in a deal is both sides should come out with some advantages, and I think that's really the outlook that we have in these global relationships. It's in nobody's interest to see global trade fall apart, currency markets fall apart. That's not what Trump wants, and I think he just wants to get everybody's attention. So when he sits down with countries, country by country, deals are done and they benefit all sides.
One last question from me. Clearly, Neeraj and we are getting greedy talking to you this morning, but no, thank you. Thank you for taking the time. Just very quickly, what risk do you foresee for risk assets in 2025? Apart from Trump, of course.
Yeah. Well, I think when we look into 2025, we are going to be focusing to a large extent on Trump 2.0, as it's come to be called. And there's a lot of moving parts there, and we're not quite sure how they're all going to add up together. I think on balance, it'll add up in a way that's good for the U.S. economy, good for the stock market, and good for the world. But we're talking about a lot of different policy changes all at one time: tax cuts, tariffs, trying to do something about reducing the deficit. So all these all these moving parts, we're not quite sure how it's all going to play out. But I think on balance, Trump likes to watch the stock market. And if the stock market goes down a lot on his policies, he'll probably reconsider. So I think the financial markets are going to help dictate which way policies go. And I think on balance, it'll be a healthy approach for the U.S. economy.
Thank you very much, Edward. It's always good chatting with you, and especially towards
Thank you.
the end of the year as we step into a very interesting 2025.
Absolutely.
Well, have a good week ahead, and we'll speak to you soon.